Welcome back to the Deep Dive. Today, we're really digging into Vietnam's economy, right around mid-2025.
That's right.
We've sifted through quite a few reports, lots of market analysis, and what really jumps out is this kind of, this dual story. You've got a nation buzzing with these really ambitious growth targets, but at the same time, it's dealing with some pretty serious global headwinds.
Exactly. And that's what we want to unpack today. Our mission really is to pull out the key insights from all this material.
Okay.
What's actually driving Vietnam's economic strategy, how are the different sectors doing, and crucially, those external factors, how are they shaping things?
Right.
The goal is to give you, our listener, a clear, well-informed perspective. Cut through the noise, focus on what really matters if you're watching this economy.
Okay. Sounds like a plan. So with that captivating backdrop, let's start with the big picture. What are the headline numbers, the main economic goals for Vietnam in 2025 that stand out?
Well, the targets are definitely bold. Vietnam's aiming for, get this, 8% GDP growth for 2025.
8%. That's significant.
It is. And they're also targeting a GDP per capita of $5,000 US. That's a big step, pushing them towards that upper middle income bracket.
And this isn't just wishful thinking, presumably.
No, not at all. It's backed by a pretty comprehensive economic policy framework. This was passed just back in May 2025, during the 9th National Assembly meeting.
Phase 1, right, a key session.
Exactly. And that framework, it's specifically designed to boost the private sector, streamline government operations. It signals a real strategic push towards more value-added industries.
So beyond the goals themselves, how are they actually planning to fuel this growth? Is it mainly public investment driving things, or are other factors just as important?
Public investment is absolutely massive here. It's a huge driving force. The target is to hit 100% of the Prime Minister's goal for 2025.
Which is?
A staggering 826 trillion dong.
Wow.
Yeah, and that's a 30% jump from last year. A huge increase. We're already seeing things speed up on major projects.
Like the big infrastructure ones we hear about.
Precisely. The Eastern North-South Expressway, Long Thanh International Airport. They're getting serious attention. And what's interesting, maybe even impressive, is that Vietnam's public debt is relatively low.
Oh, really?
Yeah, around 37% of GDP. Globally, that's quite modest. It gives them a lot of fiscal space, room to continue this big infrastructure push without immediately stressing the national budget.
Okay, so the government's spending big. What about the average person, the consumer? Is domestic demand keeping pace? Is it strong?
It is, yeah. Domestic consumption has shown a really solid recovery. Retail sales were up 9.7% year-over-year in the first 5 months.
Pretty good.
And even stronger in May, actually, 10.2%. A lot of this is fueled by tourism bouncing back. International arrivals surged, I think it was 21.3% year-over-year.
That's a healthy number.
Definitely. And the government's helping things along, too. Policies like a 2% VAT cut, extending tax payments, and they're even proposing this golden visa idea to attract talent, high net worth folks.
Interesting. So short-term looks good, but long-term.
But looking further out, McKinsey Global Institute had that projection, right? Vietnam's consumer class expanding dramatically from 41% to maybe 74% of the population between 2020 and 2030.
That's a huge shift.
It is, but it does raise that question, how sustainable is this boom if those external challenges stick around? But look, the key thing here seems to be the government trying to get ahead of this.
How so?
By aggressively boosting local manufacturing, trying to capture more of that spending within Vietnam, making the economy a bit less vulnerable to, say, export swings.
Right, building internal resilience. That paints a powerful picture, really leaning into domestic strength. So how's this playing out on the ground? Let's zoom in on some specific sectors.
Okay, good idea. Let's start with, say, telecommunications. That's seeing quite a transformation.
Yeah, how about that looking?
Well, steady growth overall. Revenue hit about 95 trillion dong in the first quarter, up 6% year over year. But the interesting part is the strategic shift.
Towards digital.
Exactly. You see major players like Mobifone really pushing into digital services. Mobifone expects something like 22% year over year growth just from their digital platforms.
And the government's behind this.
Oh, yeah. Big time. There's that huge VND 500 trillion credit package specifically for this. And they're even piloting things like low-orbit satellite telecom SpaceX, for example.
So really doubling down on digital infrastructure.
It's a clear signal, yeah, not just for calls and data, but as a foundation for the whole future economy.
Okay. Now, something that seems a bit surprising, given global trends, the steel sector. Reports suggest it's actually thriving domestically.
It is, yeah, it's quite intriguing. In the first 3 months of 2025, 3M25 steel sales were strong, up 21% year over year.
Despite global headwinds.
Yes, and the key is domestic demand. That rebounded sharply, up 44% year over year.
44%, wow.
I know. It more than made up for the continued weakness in exports. Plus, input costs things like iron ore, coking coal, they've softened globally, which helps margins too.
So this suggests Vietnam's steel story in 2025 is really internally driven.
Largely, yes. Policy-led and internally driven. It's a crucial point, actually. It shows Vietnam managing to build its own demand buffer, becoming less reliant purely on exports. That's quite strategic.
Right. And companies like Houphat Group, HPG, are they managing okay despite things like U.S. duties?
They seem to be absorbing the increased production domestically, yeah, even with those new U.S. anti-dumping duties coming in.
Fascinating. Okay, what about textiles? That's a traditional powerhouse for Vietnam. Are they finding new opportunities with all the global supply chain shifts?
They certainly seem to be. We're expecting a strong second quarter for both fiber and garment companies.
Why is that?
Well, orders are moving out of China partly because customers are rushing to use that temporary 90-day tariff pause from the U.S. on certain textiles.
Taking advantage of that window.
Exactly. Garment companies like MSH, TNG reports say they have confirmed orders operating at full capacity right through August. And fiber companies like STK, they're poised for high growth with new factories coming online.
So Vietnam's really capitalizing on that supply diversification trend.
Absolutely. It's a clear advantage for them, especially with those ongoing high U.S. tariffs against Chinese textiles. It's a win in the Trade Rebalancing Act.
And finally, in this sector spotlight, what about the push into high-tech, semiconductors, AI that seems to be getting a lot of buzz?
It is, and it's very intentional. The government's put technology right at the center of its strategy. Remember Resolution 57 from late 2024?
Vaguely. Remind me.
It explicitly called science, innovation, digital transformation decisive growth drivers. Strong language.
Okay.
And they've backed it up. There's another VND 500 trillion credit line, this one for digital infrastructure. And FDI, foreign direct investment, is flowing in.
From big names.
Yep. Samsung's reaffirming commitments, talking AI and semiconductors. Qualcomm's planning its third largest R&D center globally right there in Vietnam.
That's significant.
It is. Plus, data center construction is booming. Costs are favorable compared to other places in the region.
Any roadblocks there?
The main one seems to be electricity supply. Ensuring a stable power grid, especially for these power-hungry, AI-ready facilities, that's the key bottleneck they need to manage. Getting that right is critical for sustained high-tech growth.
Okay, so a lot of positive momentum internally across various sectors. But like we said at the start, Vietnam isn't in a vacuum. How are these domestic strengths holding up against those external pressures, especially the escalating trade tensions?
Yeah, the trade war 2.0, as some are calling it, is definitely a major factor. The U.S. applied higher tariffs on steel and aluminum, right? Doubled them to 50% from June 4th.
Right.
And globally, you've seen that sell America trend, investors moving away from U.S. assets. That's partly why the U.S. dollar weakened. The DXY index is down, 9% year to date, reaching a 3-year low.
And Vietnam's caught in the middle negotiating.
Actively negotiating, yes. But the situation's described as a fragile truce. Agreements might get pushed beyond June 2025, which just means more uncertainty, really. Vietnam's got to walk a careful diplomatic line.
So how does that uncertainty, that trade friction, translate on the ground? What's the impact on manufacturing, on business sentiment?
Well, look at the PMI, the Purchasing Managers Index. It's a key indicator, right? In May 2025, it was 49.8, just under that 50-point mark that separates growth from contraction, so a slight slowdown.
Why is that?
New orders continue to fall, mostly because of weaker exports. And business confidence, well, it improved a bit, but it's still below the long-term average. Those tariff concerns are definitely weighing on minds.
Sort of a wait-and-see approach from businesses then.
Seems like it, yeah. Even with all the domestic strength we've talked about.
Okay, this brings us to something really crucial for listeners interested in investing. The stock market. There have been some pretty stark headlines about foreign money leaving. What's the real story there?
That's right. Bloomberg reported it, record net selling by foreign funds in August 2025, about 1.5 billion US dollars.
Record selling. Since
Since they started tracking the data back in 2009, so yeah, it's significant.
Why? What's driving that outflow?
It seems to be two main things. First, worries about the Vietnamese dong weakening. It was down 3.4% year to date, making it the worst performer in ASEAN.
Ouch.
Yeah. And banks like MUFG are forecasting further depreciation, maybe to 26,500 dong per US dollar by year end. So that makes foreign investors nervous.
Understandable. And the second reason?
Just good old profit taking. The VN index, the main stock index, had surged 32% year to date. That's a huge run up.
True.
So some foreign investors decided it was a good time to lock in those gains. A lot of that selling hit the big, large cap stocks, especially Vingroup.
Okay, so you've got foreign outflows, currency worries.
Mhm.
What does this actually mean for the market going forward? Is it all looking a bit grim, or are there still underlying strengths investors should consider?
It's definitely a mixed picture, not all doom and gloom. While the foreign selling is noteworthy, you have to remember the market is finding support from domestic investors. They're stepping in.
Ah, the local players.
Exactly. And corporate earnings are still a strong positive factor overall. Plus, the State Bank of Vietnam, the central bank, is sticking with an accommodative monetary policy.
Keeping interest rates low.
Right, trying to maintain a low interest environment. They've got a credit growth target of at least 16% year over year for 2025, using tools like reverse repos to manage liquidity.
So where might the market go in the second half of the year?
Well, the expectation is that the real estate sector might actually lead a bit of a rally. There have been legal reforms helping to clear up non-performing loans and stabilizing the corporate bond market, which helps property developers.
But can real estate carry the whole market?
Probably not sustainably towards that, say, 1,400-point mark on the VN index. For that, you'd need capital to rotate into other big sectors too, like banking or consumer goods.
And valuation. Is the market expensive after that run-up?
Actually, despite the volatility in the run-up earlier, the overall valuation for the Vietnamese market still looks pretty attractive. It's currently trading below its 10-year average PE ratio.
So potentially some value there, despite the headwinds.
Potentially, yes. But resolving those U.S. trade negotiations remains absolutely critical for longer-term stability and, importantly, for continued FDI inflows. That's the key variable everyone's watching.
Okay, we have certainly unpacked a lot here. Vietnam's economy in mid-2025 really does present this compelling, almost two-sided story, doesn't it?
It really does.
You've got these very strong domestic growth drivers, ambitious government plans, some sectors doing really well. But then you have this constant need to navigate tricky global trade issues and these shifts in capital flows.
Precisely. That commitment to public investment, the digital push, building up the internal market that gives them a solid foundation, one that many other emerging economies would, frankly, envy. But yeah, the uncertainty around international trade, the currency pressures, it just highlights the delicate balancing act Vietnam has to perform constantly to keep that impressive momentum going. It's all about adaptation.
So looking ahead then, based on everything we've discussed today about Vietnam's path, what's one final, maybe provocative thought you'd leave our listeners to chew on?
Okay, consider this. We live in an increasingly fragmented global economy, right? Nations are grappling with trade wars, shifting alliances, protectionism. So could Vietnam's very deliberate, concerted effort, this focus on building internal resilience through massive infrastructure spending, through technological upgrades, while simultaneously trying to manage these external political and economic headwinds as best they can, could that actually offer a kind of practical blueprint?
A blueprint for
sustainable growth that other emerging markets facing similar pressures might look at and maybe even try to emulate in this messy new global order?